Welcome to Trading Lounge and the gold silver dollar yield video for Monday, August 9th. I want to start with with these yields here. So from the top in the 80s here, I've been tracking this move down through here as 1 and 2 and 3 and 4 and 5 for 1 here, ABC for 2 here, then 1, 2, 1, 2, and then all the way down for 3 here. And then we've been looking at this as wave 4 here. So wave 4 can pull back either to the wave 4 one lesser degree or to the 38.2% retracement level of the third wave. So if we take this from the third wave here and place that, I'm going to place it not on the, I've been working not on the spike low, but on the sort of where they've been trading more on the other low. So the 38.2% comes in roughly around 2.3, 2.2 here. So within that, I've been looking at this as the A wave here, the B wave here, and the C wave to move up here further before we have another leg down. This is the monthly chart, so let's just go to the weekly chart to get a bit of bearing, a bit more of a bearing on that. So this is the weekly chart. I've been working off this low here because this spike low is probably the right one, but because it was so volatile, it's kind of settled in on this low here. So we've had a bounce off the 50% retracement level here, but I don't quite think it's I don't think it's quite the low. I think there's one more little low to come in, but before we go there, we've got the A wave here, the B wave here, and the C wave to move up here. Wherever that C wave's gone, is it hiding somewhere? There it is up there, coming down here. Anyway, you get the picture. You get the idea, rather. So based on that and looking at moving into the daily chart now for that, so from this low here, that's where I've been working from, and as wave A up here, and then coming down for wave B here. So wave B would be the orange minor wave A, B, and C wave to come down. And I've been working from wave B down to wave C here, an orange wave C, if you can see it in there, sitting on the 1 there. That's where I was sort of thinking for this. And I need to get 5 waves from B down to C. So I've been counting down 1, 2, 3, 4, 5 here for wave 1 and back for wave 2 here. And then 1 and 2 and 3 and 4 and 5 for the third wave. So we're in the fourth wave here. Now there's 2 things that we'd been looking at here. One was that we, in this A wave here, that's in 3 waves. So we could have just come straight down for the 5th wave here, but it came down to the previous low, but it didn't give us 5 waves. We've only got 3 waves to come down. So I've got to call it a B wave, and this move that we've just seen pushing up here, we need to understand that a little bit better. So because that will be wave C of wave 4, and then down for wave 5 here of C, of B, and then that would be the low at that point. So between wave B and wave C there, we're looking for 5 waves. So we're just going to go into the 4-hour chart. That should do the trick. So we've got wave 3 here, an A wave here, and we don't quite get 5 waves down here. So we do from this point here where we can go 1, 2, 3, 4, 5 here, but then we've got all of this here. So we'd have to look at this as an A and a B and a C wave for the B wave. And for the C wave there in green, we need 5 waves to the upside. So probably we'll need to go up a little bit higher. So I can see in here we've got wave 1 and 2 here, and then we've got 1 and 2 and a nice third wave here. So we're not quite at the top of wave 3 here yet. Then there'll be wave 4, and then there'll be wave 5. So we'll be moving up a little bit further. So there's still sort of pressure there for that. And then we'll come down for wave 5 of C of B here. And then we move up from that point. So this jump in yields here, obviously the yield is, you know, the nemesis of the gold. And that's partly the thing. The other point is the US dollar index here. So it's kind of got a bit more of a direct relationship. Now, if I go to the 4-hour chart here, what I've been working through, as you may know, is wave 3 here with an A and a B and a C wave here for wave 4, and then looking for 5 waves to the downside here. Now, I didn't quite get 5 waves down here. I could probably force 5 waves here, and maybe I'll have to, you know. But what I have to say is that if the US dollar index takes out the top there, then it doesn't really destroy the count. It just means that we need to look for new highs, because I'm quite sure that this first leg up here is corrective. So, because we've got, this whole first leg here has got 3 waves in it and not 5. So that makes the rest of it corrective. All right. So it's just going to get it could get a bit bigger. Hopefully what will happen is it will just turn down from these current highs here, and we can start counting 5 waves down. But yeah, it's not being very friendly in that instance. So I might just go to the 15-minute chart here where I have been counting it. So yeah, I was looking for 5 waves down. Now, first of all, got 1, 2, 3, 4, 5 here, so not a problem. 1 and 2 here, and then I was looking down here for 1 and 2, and 1 and 2 and 3 here. I was looking for wave 4, but then it's moved up from that point. So I don't have my wave 1 here. I don't have my 5 waves to move down. The question is can I put this wave 5 here, for instance, and look at this as an A and a B and a C? I could do, but it just sort of looks a little bit, because I could count that down as 1 here and 2 here and then 3 here and then 4 here and then 5 here. But the trouble with that is I got overlap on wave 1 and 4 over there. So I'll just let it sit for a day or two, and I'll just try to look at other counts for that as well. But with this pushing up through here, it's obviously, I'm not sure what happened to the gold market, but this may have been, you know, part of it as such. Obviously, there's some big fish, and you just never know what they're all doing. But yeah, anyway, that's the dollar and the yields on that side. So it puts us back into the gold market. But before we go to the gold market, I want to go to the silver market, because the silver market, I've always had this count here, which I've always preferred, which is, you can see up here, this is a daily chart, whatever. So looking down as the A wave here, and as I've mentioned before, an A and a B and a C wave to this high, not that high, because we need to get 5 waves in this move here, and that's 1 and 2 and 3 here, and then an A and a B and a C for 4 and up for 5 for wave A, and then an A, B, C for the B wave and up for the C for the B. So this is how I've always counted it. So as I've been chatting last time before this spike down, we're looking for this 5th wave. So that might be it. You know, we may have that. Everything may be okay now like that. So then we push up from that point. I'll have to do some more work on it, and but if that's the case, then we can push up from that point. So I think that this is sort of interesting, just how we can relate this to the gold market. That's all. Now, obviously, this can, you know, we could probably count it lower, but I do have 5 waves there. So I want to take this idea of this B wave up here and C wave down here in 5 waves into the gold market. Okay. So I haven't counted this up here in silver. I've started to look at it in gold on a tick chart, but it's a little bit sort of volatile and messy and tricky, but we'll have a look at it. But I just wanted to show you that picture first, or rather that image. And so the gold market here, This is a monthly chart. This is, yeah, I kind of like it in a way because we've got the stochastics, which has been pulling back down on the monthly. So that's good. It's, you know, probably come down further. But it does give us that sort of, you know, that sniff of buying opportunity kind of thing. We just need to build some evidence in a move up here to like help confirm that. That would be our next step. Now, as a wave 4, it has made a new low here. And I was thinking this can be the A wave, the B wave, and the C wave down here now. And the line going through here is the 38.2% retracement level from the low of wave 2 here. So that's cool. I understand that we've only got 3 waves up here. So we could look at this differently. I know that we could look at it, been a fair bit of chatter around about this. So as an expanded, you know, a humongous expanded flat correction, which would look like this with wave 3 here, an A and a B and a C wave here, and then up for wave 5 here. So look, we may have to go there at the end of the day. I don't know. This is just a 2-month chart, so that's why that's a little bit different. But yeah, coming back to this 1 month here and looking at the stochastic here, and we're still in that sort of space there. So I'm okay with everything here for the time being. And then the weekly chart. So this is how it would play out on the weekly chart with wave 3 here, an A wave, a B wave, and a C wave. We're still in our 38.2% retracement level. These are 2 medium levels here. The stochastics for the weekly is also, you know, setting up quite nicely down here as well. You know, the obviously indicators are lagging, but just gives you that sort of another level of confidence if you need those indicating things. The other thing, so let's sort of go here. If that B to wave C here, it looks a little bit weird, but let's just go to the intraday to have a look at that. Of course, I could count that more bearish without a problem, but let's just stay with this for a moment. So from wave B up here, we've been counting, we had a bullish count where we had this as wave 1 and an A and a B and a C wave here for wave 2, but we can convert that to 1 and 2 and 3 here, and then look at all of this as wave 4 here. And then this capitulation down here, if you'd like to call it that, for wave 5 of, you know, of C there. So we can put this wave 4 in there. Give that a bit more credibility on there. So the case now would be to try to figure out if we can get 5 waves moving up through here, or are we going to get a corrective move up there? That's the thing. So really we have to go to the tick chart to do that, and I've done that, but we'll just bring in some more data here. Maybe 20 is enough. Oh, wasn't that? Must have gone to 10 ticks or something. 20 ticks, 5 ticks, 10 ticks. Just bear with me for a second. Okay, so I've made a bit of an effort here. So first of all, we don't need those. So it's a little bit tricky. This is 10 ticks. So I'm just trying to understand the low here for this. And when I look at this low just in here, you know, I'd try to count this here. I don't get a very clear 5 waves for the first move to the upside. So it's a bit hard to get. You know, I could just go 1 and 2 and 3 and 4 and 5 and kind of get away with that a little bit, but on closer inspection, it's just a little bit not quite there really. I could, from this low here, I could go 1 and 2. Look at this as a 3rd and 4th here, but that would just give me an A wave here, a B wave here, and a C wave up here. So it's not very clear for me to count, to be honest. You know, I can't give you a degree of confidence with that, you know. I can count 5 waves in this little move here. I can, and now that it's running a little bit, I can start counting it a bit, but I've still got all that mess down here for that. So I can count 1 and 2 and 3 and 4 and 5 to this point. So, but I don't know if it's corrective, if we're in a corrective rally or we're in an impulse wave to the upside. So we'll just have to wait and see, I think. One of the things we can always do is look at the low and the high here, for instance, and look where this 50-60% retracement level is at this point. So we could say that if the 1700 becomes the retested resistance, then we're in the bear market's still going at this point. So I don't have enough evidence to call anything up here just yet, you know. I can spend some time on it this afternoon and the evening and try to sort of figure it out a little bit better. But it's not giving away anything just yet. You could call it anything coming up here. You could count it as corrective or impulsive at this stage. So all I could say at this stage to you is that this is the support. If it becomes the resistance, then we've got a problem at that point. Right? A bigger problem at that point. I'll be much more bearish at that point. Okay, so that's one way to look at it. So the 1700 is a bit of a line in the sand. So let's just see how that plays out. So that's all I've really got, I think, at this stage for this. This is the more bearish count here. Looking at the rally as a wave 4 and seeing more downside here, which kind of makes sense to me as well, actually. So that would bring us down to 1500. So if the 1700 becomes the retested resistance, then we'll look down to the next step. And we would look to this before we look for even a bigger bearish picture, which would be this one here. So it would be one step at a time. It would be the 1700 first and then the 1500 at that point, and then we'd look at this. But I don't think we need to go here just yet for this. I kind of understand this because when you look at let's just go for a little tour, shall we? Let's just have a look at let's come back here for a moment and let's go to metals. Let's go to ABX and look at ABX on the monthly chart, as I've looked at it before, and we've talked about this before. Don't worry about any of my labeling here. It's just sort of shooting the breeze a little bit. But this is ABX and this is 2013 or whatever up the top here, right? So a thing that's always sort of haunted me about gold, and this goes for GDL and GDX as well, by the way, is that gold had moved up and took these tops out here. So ABX, which is 10% of GDX, it's got the same sort of pattern. So when I look at this move up here, I've labeled as an A and a B and a C wave here, then that makes a lot of sense to me. And then looking at this move down here, we can count that as 5 waves down here. So that's not a problem. Sort of bearish. The only bullish way we could count this would be up for 1 here, back for 2 here, and then up for 1 here and back for 2 here of a smaller degree, you know. But when we look at this on the weekly chart here, we can look at this as wave 1 down here. And here it counts quite nicely as 5 waves down through here. On US spot gold, it doesn't count very nicely, but I'm a little bit philosophical when it comes to looking at like US spot golds coming down from that point. I mean, I can see past all the little sort of what you call them, sort of, I don't know, manipulations or whatever you want to call them. But when I look at US spot gold, I can see this 5 wave structure here, which is much clearer on ABX here. So we can see this down as 1 and 2 and 3 and 4 and 5 here. But it's a bit more difficult to see that on US spot gold. So if we go back to US spot gold here and go to a daily chart, so to speak, like to count 5 waves down here, that's quite difficult for the average person, you know, and I don't blame them, because we've got overlapping wave structures within that. So it's difficult to count that. It counts, you know, people count it down as their WXYs and so on and so on. But I mean, I can see the 5 waves in that particular structure. But it's just that there's some overlapping going on in all of that. That would be the third wave there. So we look at this as wave 1 here and 2 here and 3 here and 4 here, well, 4 here and then 5 down here. So it's a bit tricky. And yeah, sure, I know you can throw stuff at me for that, and I wouldn't blame you either, but I'll be dodging them for sure. Anyway, let's just see which way the cookie crumbles. So I can see the bigger bearish picture when I look at ABX, for example. You know, not a problem. But should we be relating that to companies like ABX and Newcrest and some of the other bigger ones out of China and so on? You know, I don't know. I don't know. I mean, all the gold stocks are different, isn't it? I mean, because it costs a different amount of money to get them out of the ground. Some gold's accessible and other gold is not accessible. As simple as that. So, just to recap here somewhat, is that let's just stay with this current pattern here. A bit of a long shot, I understand that. As 1 and 2 and 3 and 4 and 5 here. But let's just stop and breathe for a while, and let's just build a case here. Let's get some more information about this rally here to see if it's going to be corrective or impulsive, and then we'll make our decisions in that. Because looking at the bigger picture, we can just get into the guessing game. We have to build a case on evidence from the ground up, and the ground up is looking at, you know, what is this move here, you know? And even if we don't find any answers in here, we might be able to find answers in other markets, you know, related, you know, like silver or palladium or whatever, in this move up here, because the answer lies in this move up here. That would be the answer to the bigger question of everything. The other point here too is that if we take one of these tops here, they're all pretty much the same, and you could sort of argue different cases for each of them. This is let's just call this the 50-60% retracement level here for this. So being above that would be nice, wouldn't it? You know, having support on that, or even support back on the 1800 here, would definitely put us in the right place. But yeah, that's it. So all I can do is, you know, build a case on this move to come to the upside here. Alrighty, so I'll leave it at that. Thanks for tuning in. Cheers.